more market opinion. As we told you earlier, Anuj caught up with Nirmal Jain of IIFL in our special series Unplugged and began by asking him if he expected this kind of rally post the Brexit and if the market will keep climbing the wall of worries. Listen in.
To be very honest, maybe it's not that I'm right most of the times, but at least in this case I was not so much worried. Even when I was interviewed by the channels or I was interviewed by newspaper which appeared a day after, that I think Brexit worries for India were exaggerated. And to my mind, first of all, so many things can happen. Because if you look at, there can be a second referendum after negotiation. Even if that doesn't happen, the worst case scenario, Brexit happens. It's too early to presume that there will be a recession and the entire Europe will disintegrate. These things are all one-sided version. And even, you take that for granted, then also India is relatively immune to these things. Amongst emerging markets or destinations for investment, India stands out. So I was personally not too worried that from Indian stock market point of view that there's a catastrophic or a disastrous event. But yes, one has to be cautious because if this leads to some more events, like some banks or funds going bankrupt, or very quick succession, some more countries getting out of it, political problems happening, then obviously that can have a more serious impact. But at this point in time, I think that market, even global market, not only Indian markets, have taken it in its stride and they are moving ahead. So,
but are they moving too fast right now, global markets? Do you get a sense that liquidity is just, driving asset market crazy?
It's a fact, actually. So when many people say that there's a bubble which liquidity is creating, it's very difficult to argue against it. But at the same time, this has been going on for so many years. So you really don't want to be too much ahead of time because there are no precedences. And how human behavior and all these things will actually, so there are many people who forecast bloom much ahead of time, say in 2005, 2004, or earlier. If you're an economist, fine, that in 2008 when actually there was a crisis, you can go back and say that, I said so. But if you're a fund manager or you're running a business, then you get out of business too early, then also you'll be penalized.
Exactly.
So I think the way world stands today is a very risky and is precariously balanced. But having said that, I don't think one has to be much smarter than the market or think too much ahead. Keep be watchful. Look at things around.
But just respect the market, what the market is.
Yeah, so I think maybe at least for next quarter, couple of quarters, few quarters, things are looking to be in order. There's an event, which leads you to believe that something can go, horribly wrong. Then, but otherwise, just keep moving with the market. To my mind.
How important is the Q1 earnings season, Nirmal? We'll have, of course, Infosys and TCS come out same day. Reliance will come out with numbers, or same week rather. How important is Q1 going to be, considering that Q4 we had some green shoots?
I think it will be important, but not something which is really decisive.
Okay.
Because more or less it's discounted that, Q1 will be maybe a slow or a very hesitant recovery. Most analysts would expect second half to be much better. So when you look at this year, your corporate earnings growth, most people would forecast around 15-16%, and a lot of it can come from oil marketing companies. Because of lower subsidy, their profitability could be much higher. But having said this, I think more important things to watch will be monsoon and post-monsoon, how and whether the interest rates start coming down now and how investment cycle revives. So I think Q1 earnings are important because you'll see some bit of turning point. But if you really want to look at earnings, then maybe Q2, Q3, and Q4 would be a lot more important.
Do you see markets making a new high this year, Nirmal?
Pretty, I don't remember the previous high, but
9100 on the index, on the Nifty, and 30,000 on the Sensex.
It might touch thereabout, or maybe next year is what it can cross the peak.
Okay.
So I would rule it out, but it's not something which is very important at this point in time.
Okay, so so what kind of sectors are you still bullish on? This has been such a bottom-up stock pickers market, Nirmal. NBFCs have done well. Of course, you are in the same sector, but that has done well. Private banks have done well. Consumption has done well. What remains broadly your key bullish areas?
So whenever market takes off or market is turning bullish after some gap. So obviously banks are very liquid and they attract a lot of investment. But I think banks, FMCG, cement, auto selectively, they all look good. IT one has to be cautious and look at bottom-up stock picking. Pharma also one has to be cautious and look at stock, bottom-up because valuations are already rich.
Yeah.
And there are different kind of concerns for different kind of stocks, so you really can't be top-down in that sector. So I think capital goods also, wherever there's a revival, whatever this government has been doing for last 2 years, now these are early days, but we are actually now started seeing some results.
Okay.
So you see that some SME sectors are recovering, they are seeing orders, they are seeing revival. Government has gone to execution mode after this budget.
Yes.
And we are seeing that a lot of policy reform now they are taking place. Now there's a direction to many things. So I think that is a very good sign, and hopefully if monsoon also is good, and if GST can go through, that is very likely now. It's much more likely than it ever was. So all those things put together will put us in a very good platform for a bull market.
Last question. What about fund flows? Do you think
Fund flows are very strong. So I think the FIIs continue to pour in money. And whatever little I understand that for FIIs, one, they have risk appetite. They want to take risk. Two, they think that India is a great investment, can absorb investment and give good results and good returns, and that very few markets can do. So India by default also signs, and as a market, when macro variables are turning favorable, I think most investors are looking at India with a lot of interest. So now it stands out from the rest of the emerging markets, and obviously it stands out from BRIC. And that is, I think, becoming very visible. So I have a feeling that fund flow is continuing, and that should continue unabated.
That was Nirmal Jain. Of course, we'll get the Unplugged part tomorrow, and that will be part of the Unplugged show as well.